room, we have the representative of EU delegation, Mr. Gonzalez José Rui, who is coming in. In a few minutes, we shall give him opportunity to open for us. We have also, he's representing the European Union delegation who are behind this work. We have also Pablo Quills, who will be presenting, who will make a presentation on facilitation of cross-border investments in the EAC. Pablo is from Africa Rise. He's representing Africa Rise and is an expert who did this work. We have also Mr. Deogracias Mbarara from the head of, from the Department of Private Sector Development and Investment Promotion, EAC Secretariat. He's actually been the first speaker to welcome us. We have also panelists, our invited panelists. We have Mr. Robert Bwire from Kenya Investment Authority. He's in the room. He will be on the panel. We have Mr. Tuyishimire from Rwanda Development Board, who is representing Honorable Claire, is in the room. We have Mr. Muchiza Robert from Uganda Investment Authority. And we have Mr. Victor, who is the Senior Manager on International Payments from Equity Bank Tanzania. Those are our panelists. Shortly, we shall have time for each one as we follow our program. And I wish also to thank our CEO, East African Business Council, who is our convener, who is our host now, who to support the entire process. Thank you very much as we wait to start officially.
Yeah, thank you very much, Nathan. And that's great. That's great. Again, allow me to recognize our counterparts, our development partner from EU, and other partners present, including the GIZ, Trademark East Africa. EABC does appreciate your support in deepening the integration agenda and the building resilience and recovery after the triple C's, the COVID, climate change, and the crisis we are in. So I'm happy that all the partners, development partners, are aligned to our aspiration to continue to deepen our integration and ensure that EAC continue to be the leading lake in terms of growing prosperity through trade and investment. So EABC is again, Nathan, we are behind this. It is our core, it is our mandate, and we'll continue to ensure that we improve and sharpen the business environment in the region. And as we strive to join the CFTA, we need to ensure that the EAC remains robust in terms of the business and investment outlook. So we are very committed. Again, we'll be sharing the insight on the report on the barometer. I see the consultant, Rose Rona, on the call. I want to recognize her for the excellent work she has been championing in the region, and her team. They've been doing quite commendable work, and at the ABC, we look forward to continue engaging you, Rose, and your team. So I think shortly, again, as I said, in 5 minutes, we need to commence our webinar, and I will ensure that this webinar really the recommendation that are generated are put into a matrix of action. So I think that is the key. It's not just a webinar, but we want to ensure that those challenges and opportunities integrated in our plan of action with the EU Africa Rise project. And maybe in the meantime, while we are waiting, because I wanted Nathan to give a brief about this project, so that people understand what is the EU-Africa Rise and what they intend to do in the region and where they are coming from. So in the meantime, while others are joining, give just a brief on the Africa Rise project before we dive deeper into the webinar.
Thank you very much, CEO. This was an initiative between Honorable Dr. Peter Mathuki, the Secretary General of East African Community, working hand in hand with the European Union office in Tanzania. The office of the European Union, together with the Secretary General, they came up with terms of reference to initiate a program on private sector engagement in East African community integration agenda. So it's a program at the infant level, at the inception level, which intends to raise the voice of private sector in East African integration processes. This program, once commenced, will bring on board the private sector of East African community in all what EAC is doing, so that they can be able to tap into opportunities of the East African extended market. It will also work in favor of private sector to the extent that it will look on barriers, non-tariff barriers, technical barriers, and it will also give them a chance to prepare much more better on Africa Continental Free Trade Area. I'm trying to highlight the priorities now of this particular program once commenced. It will raise the voice of the private sector. It will engage on regional, on Africa Continental Free Trade Area. It will work to reduce barriers, technical and non-technical. It will also look on SPS measures so that we can have standards. It will also look on trading services, especially the mutual recognition agreements that we are signed and more others to be signed. So it will work towards to ensure that professional bodies engage each other in East African community. Briefly, that's what I can see. I can say. I don't want to take much time or deviate the purpose of this webinar because that would take another time again to explain about this program. And thank you very much, CEO. If you allow, we can commence now so that we don't keep our participants waiting.
Over to you, please. Let's commence.
Thank you very much, CEO. I wish to recognize and welcome Mr. Deogracius Mbarara, and I'm now back on the program so that Deogracius Mbarara can give us opening remarks from the Secretariat point of view, and we proceed from there. Thank you. Karibu Deo.
Thank you, Nathan, and good morning, everyone. Just before we start, Nathan, I would kindly request, because I'm from the panelists, I'm only seeing a few that have been given rights. So if we could have everyone that's supposed to be on the panelists to be given rights before we start, because I was just looking at that first, and then we can start.
Thank you so much, Deo. My colleague Patrick will work on that. And
I would like to believe from the roll call you did, everyone that's supposed to talk, or I, as a member of the panelists, are already on this call. Is that correct?
Yes. Confirmed.
Okay, if that's done, then that's okay. So good morning, everyone, and all protocols observed. My name is Deogracius Mbarara from the East African community, and we are happy to be here to participate in this webinar, as investment is very important in our country's economic development agenda. And the EAC region has put concerted efforts in terms of improving the investment environment for attracting and promoting investments. And this has been reflected into various publications that have been done. For example, there's the Rand Merchant Bank, which ranks countries in Africa in terms of attractiveness. And in the last 3 or 4 years, in their publications, 3 or 4 countries from EAC partner states have been ranked in the top 10 in terms of being attractive for investment. And some of these measures that our partnerships have undertaken have also contributed to the investment that the countries have gotten. And I'll talk in terms of the cross-border investment. Prior to COVID, we had, I think 2019, the intra-EAC investment was 725 million. And then we went through COVID where we got a dip around 143 million. And then in 2021, we have started seeing the spike to 583. So we are seeing an upward trend, and hopefully that will continue. So at the EAC level, there are various regional investment frameworks that have been put in place to promote, facilitate, and protect cross-border investments. And this includes the treaty that provides for harmonization and rationalization of the investment incentives for purposes of promoting the region as a single investment area. And the other instruments include the Custom Union Protocol that aims, one of its objectives is to enhance domestic cross-border and foreign direct investments. And the other instrument is a Common Market Protocol that provides for the right of establishment, which provides that nationals of the partner states can establish into any of the partner states and undertake economic activities. There's also a provision, Article 29, that provides for protection of cross-border investments. So investment is guaranteed in East Africa and is promoted, and the laws or the protocols that have been provided caters for protection of that investment. So this framework that EAC has put in place allows for partnership cooperatives in the areas of investment and industrial development, and this to harness the investment potential for promotion of the economic growth and development in the region. So, ladies and gentlemen, some of the measures or initiatives that countries have undertaken to implement these legal instruments have included the Model Investment Code that the EAC adopted in 2006, but this needs to be revised and upgraded that to include all the EAC countries. But this was sort of to provide a guide in terms of the EAC countries in terms of developing their national investment codes. And then the EAC investment policy that was adopted in 2021 that provides a policy framework for promoting, facilitating, and protecting investment. And we also have an EAC Model Investment Treaty that was adopted in 2016. This Model Investment Treaty provides a guideline or a template for EAC countries when they're negotiating on investment treaties with third parties. There are also the agreement on avoidance of double taxation that was signed in 2011, and then a policy on EAC domestic taxes that was adopted in 2018. And then we also have other measures that whose purpose is to promote the EAC as a single investment area. We have an EAC investment guide that can be accessed through the EAC investment website. So despite all of this, the challenges still remain in terms of implementing this instrument, and we acknowledge them, and we are trying to address them. And some of this includes the varying fiscal and non-fiscal incentives that countries offer. So which brings a challenge in terms of promoting EAC as a single investment area, where you have countries, as they strive to attract investment to their respective partner states, defeats the purpose of promoting the region as a single investment area. So we need to harmonize those incentives for purposes of promoting the region as a single investment destination. And the other is, as I've mentioned, the agreement on double taxation and the policy on domestic taxes. There's slow ratification with regard to the agreement on double taxation. It's only 3 countries that have ratified. So there's need to fast track ratification of this, and then implementation of the domestic tax harmonization policy with regard to excise and VAT. It is in a keen interest for EAC to promote intra-EAC investment and address these challenges. However, the question still remains, how can these legal instruments that have been put by our heads of state and then our council be further utilized or be further operationalized? So we hope this webinar can provide recommendations as CEO had highlighted, actionable recommendations that we can take forward that can help us fast-track implementation in terms of the areas that have been put forward. We acknowledge the participation of the development partners, and we also wish to acknowledge and appreciate EABC and Africa Rise program that supported the preparation of this webinar. And we look forward to receiving the recommendations that will facilitate cross-border investment into East Africa. I thank you. Thank you, Nathan.
Thank you very much, Deo. Thank you for very interesting remarks. Thank you for your support also in the entire process for this program. Thank you for always being there on behalf of the Secretariat and providing guidance to this work. As I said earlier, this work is being supported by European Union. In the core, we have Mr. Jose Rui Gonzalez, who is also behind this work on a day-to-day basis. Allow me, colleagues, to invite Mr. Jose Rui Gonzalez for opening remarks.
Thank you, Nathan, and good morning, colleagues. I just wanted to first thank the EAC Secretariat, development partners, including GIZ, Trademark East Africa, the East Africa Business Council, members from the public sector and private sector, Karibu Sana. As a way of introduction, my name is Jose Luis Gonzalez. As Nathan mentioned, I'm a program manager at the EU delegation to Tanzania and EAC. And we are the ones who are supporting this webinar on the facilitation of cross-border investments, which is curated by the EU Africa Rise project. I wanted to give a bit of a background to the colleagues on what Africa Rise is, which is essentially it's a technical assistance facility that is funded by the European Union, and it's implemented by a consortium which is led by Lado Mills. The aim of EU Africa Rise is really to promote business development, improve investment in climate, and also to support inclusive and sustainable growth, job creation, and decent work. The facility also promotes macroeconomic policy, regulatory reform to create a business environment that encourages investment. So the EU-funded Africa Rise program has supported this preparation of this webinar, and it's also a way to show that the European Union is strong in its support of private sector development in East Africa. Another area that I wanted to highlight in my opening remarks is the work that we're currently doing with the EAC Secretariat and the private sector. We have two flagship programs, namely EU EAC Core and the Markup program. I'll start by highlighting a bit of the activities in our core program to kind of guide you on what areas we're focusing on. For our core program, it's a program that is on the amount of 16.4 million euros. Core stands for Common Objectives in Regional Economic Integration, and the idea is really to support the deepening of the EAC regional economic integration. Now, there's three, let's say, main areas that we're trying to support. One is the customs union, the second is the common market protocol, and the third is the EAC Secretariat itself. So within the customs
listen,
union,
I can't hear Gonzalez. I don't know if it's my.
Sorry, Chair. Can you not hear me well?
I can't hear you well. I think you're breaking.
Oh, I don't know if it's just you, Chair. Maybe someone else can confirm.
I can hear you well now. We can hear you. We can hear you, Gonzalez.
Oh, maybe.
You can hear me well?
Oh.
Okay. I would assume that that the rest can hear me quite well based on the chat. So maybe I'll just continue, and hopefully the CEO can just have a look at his connection there. But again, just wanted to highlight first with this core program, how we're supporting the customs union. One, we are integrating the regional customs ICT platform. Now, this is directly supporting the Directorate of Customs and Trade at the EAC Secretariat to develop and implement a centralized customs ICT platform. So this means shifting from a bilateral to a centralized interconnectivity system. So some of the activities include reviewing customs clearance processes, the legal framework, upgrading the IT infrastructure, and building capacity, including to the national customs administrations. We're also working on strengthening the risk management and valuation functions, and we're also supporting the coordination and monitoring role of the EAC Secretariat. That includes harmonization of both customs procedures and practices, establishing regional performance standards for core customs operations, ensuring systematic monitoring of performance standards, and also ensuring effective integration of all stakeholders, including the private sector, and facilitating this change management. In terms of the common market, where we're trying to promote the movement of the free movement of services in the EAC, here we have agreed, we're trying to improve the implementation of the agreed EAC commitments on liberalization of services, including monitoring mechanisms for the removal of restrictions in prioritized sectors, supporting regulatory reforms, promoting awareness and coordination through PPD platforms, including this one today, and national stakeholder sensitization campaigns. In terms of the EAC Secretariat, we're working with them quite closely in terms of them being able to strengthen their management of programs and also be able to deliver on their mandate. Now, that is one of our flagship programs, the EAC Core program. The second program that I want to highlight is our markup program, which is our market access upgrade program. This is a 35 million EU funded program, which is contributing to the economic development of the region by increasing the value of both extra and intra-regional agricultural exports, with the main focus on exports towards the European Union and the region. So here we've been working with the EAC Secretariat since 2018 on this program. It's actually concluding next year, with the hope of actually developing a second phase. But at least in this first phase, we had 4 main areas that we were looking to. One is enhancing the capacity to advocate for the removal of sector barriers. Now that includes increasing transparency on trade procedures, enhancing the private sector's capacity to identify and advocate for the removal of trade barriers. For instance, building capacity of the private sector trade and investment support institutions to identify and engage in policy advocacy on barriers, but also to recommend on policy options. We also worked to extend and raise awareness on trade facilitation to cover the target sectors that we had mentioned in markup. We're also looking at sector standards and SPS measures. We're aiming to develop or at least update regional standards and SPS measures, reducing national implementation gaps of EAC standards. For instance, the support domestication and the monitoring of actual compliance, supporting harmonization and recognition of testing procedures, also facilitating the lessons learning from the EU integration procedure. Given that EU has a lot of experience in regional economic integration, we wanted to pass that on to our colleagues here in the EAC. We're also working on export competitiveness, looking at sector SMEs, where we're really looking to improve awareness of market requirements, improving compliance for compulsory and voluntary standards, and also increasing value addition. For instance, supporting new packaging, supporting processing upgrading, and also aims at increasing access to finance. The last area within markup that we're also supporting is business development activities for sector SMEs. Here we're looking to really aiming at strengthening the TICIs, so the trade and investment institutions, aiming at developing export and investment linkages in close collaboration with the TICIs, and also improving SME export and business capacities. Now, I know there's a lot of work that our other development partners are doing. I just want to recognize our Team Europe colleagues in GIZ, with their Support East African Market-Driven and People-Centered Integration Program, where they've worked quite closely with the EABC. And we hope to hear more about the study that they undertook on the Barometer on business investment in East Africa community post-COVID-19. So with that being said, I just wanted to wish all of you a successful webinar, and I look forward to this fruitful discussion.
Thank you very much. Thank you very much, Jose Louis, for your enduring support in EAC integration, particularly the support towards the private sector. And we appreciate going forward your continued support. Allow me, ladies and gentlemen, to recognize the remarks. I invite the one representing GIZ. GIZ has done a lot with us, with EAC Secretariat, with EABC, with private sector of the region, at national level, at regional level. So you're most welcome, GIZ, the one representing GIZ. Hello, do we have anyone representing GIZ in the call? If there is no one representing GIZ in the call, let me see, let me recognize the presence of the EABC chairperson, if he's in the room, in the call. The board of EABC, do we have a chairperson of the board in the call? Can you hear me? Ladies and gentlemen, can you hear me?
Yes, Nathan, we can hear you.
Yes, Nathan, you're clear.
Yes. GIZ is not in the call. EABC board, not in the call. And we need to manage time. Can we have the presentation on cross-border investment by Africa Rise, Pablo, so that if the ones to speak are in the call, they will let me know and I will give them a chance, but we can use our time profitably, and we allow Pablo to present on cross-border investments. Pablo, please.
Maybe Pablo, before Pablo, Nathan.
Yes, please.
I wanted to offer a few remarks on behalf of the chair.
Oh,
then,
good.
Yes. Thank you very much. Thank you very much, moderator. And again, allow me to appreciate you and the team, EABC team, that have organized this important webinar. Also recognize the representative of the Secretary General, Dewo Mbarara, for very insightful remarks in terms of the instrument to boost intra-regional investment and cross-border investment. The EABC board members present. I also want to recognize the CEOs of investment promotion agents present and their representatives. EABC board members again, and I want to appreciate the EU and GIZ for the support of this initiative, and our traditional donor trademark also for doing a commendable work in terms of facilitating trade. I know that There is also media fraternity present. We want to welcome you. I want to appreciate again the consultant who have done the work, the Barometer, looking at the business and investment in the ESC and the outlook 2022-2023. So I'm very honored on behalf of our chair to welcome you to this important webinar on cross-border investments and the launch of Barometer on the state of business and investment in the ESC. The East African Business Council, of course, with their support from GIZ, we commissioned this study called Barometer on Business and Investment in the ESC and outlook, looking at the outlook projections for 2022-2023. So the Business Barometer captured the sentiments of the business stakeholders on business environment within ESC during that period. It had a backward looking and also forward looking. Today, I'm honored to launch the EABC Barometer on business and investment in the ESC. But again, before the launch, which will happen after the presentation, allow me to shed some of the key findings that whoever will be presenting, and I will reflect on the key aspects that are very important in terms of the level of optimism and the good sentiment that the bloc is recovering very well from the devastating impact of COVID, where we are now registering about 11% increment of the investment and business in the region. So we've also looked at the countries' sentiments, including business in Burundi, Kenya, Rwanda, and Uganda, who reported reduced costs of doing business. While those in South Sudan and Tanzania, they felt that the cost of doing business is increasing, and this is due to what I call the triple C's: climate change, the negative repercussion by the COVID, and the conflict, Russia-Ukraine conflict. So that was something that maybe we'll reflect on during the discussion, the impact of those three C's on our business environment and on our business outlook. Very good thing that were noted in the businesses in Rwanda and South Sudan and Tanzania are optimistic. They are very optimistic about the following dimensions: that the improvement in the business climate is applauded. The support from the governments, our regional government, is applauded in terms of putting in place a strong recovery measures, including the support to service sector, tourism, manufacturing, and the logistics that have suffered an enormous loss due to a pandemic. So again, this study came up with some key highlights that the consultant will present every on what can be done to fast track the recovery agenda. So there are very, very key and tangible recommendations that we need to reflect on, especially the issue of harmonization of domestic tax has been affecting the cross-border investment flows. Continuous efforts to double our effort in elimination of trade barriers such as tariff and non-tariff barriers, which continue to impede the growth of intra-regional trade. The NTBs presents the biggest challenge in terms of cross-border investment and the need for investment promotion agents that are here to see how we harmonize our policies and regulation, as Dale mentioned, to facilitate a single investment destination. The effective implementation of free movement of persons as per the ES Common Market Protocol was also highlighted, that there is a slow progress, which was also highlighted during the summit in terms of deepening our common market protocol. Despite 11 years of existence, we see that it is not yielding sufficient results. Harmonization of policy and investment regimes. Countries are still inward looking, saying we put incentive to attract investment in a country rather than to the region. So it was pointed out that a kind of harmonization of a common incentive regime is very critical to avert business distortion and not create a cutthroat competition, which is not necessary, and we need to complement each other in terms of promoting the region as a single investment destination. Integration of informal trade into formal channels and trade agreements is very critical. Generally, one of the challenges that were registered that the level of informality in the region is increasing because of the COVID and NTBs. So we are losing a lot of investment due to the growing level of informality because of our regulatory impediment that is not conducive to foster cross-border investment. So those are some of the highlights, but the consultant will dive deeper into the details. But those were the key highlights, and I look forward for fruitful deliberation and discussion to ensure that we double our efforts in boosting cross-border investment by eliminating and reducing those daunting binding constraints. Thank you very much, and I wish you a very fruitful discussion. I hand over to the moderator, Nathan.
Thank you very much, CEO, for your detailed, very informative opening remarks. And indeed, the private sector is recovering from the 3 C's, as you mentioned. And we are looking forward for a very, very sustained recovery. Next on the agenda, let's have Pablo. Pablo is an expert from Africa Rise and is going to present a presentation that will be like an icebreaker on our discussion that we shall have with our panelists. Pablo, can you hear me? Please proceed with your presentation.
Thank you, Nathan, and thank you everyone in the audience, and especially thank you the CEO of the East Africa Business Council for the initial remarks. My name is Pablo Quiles. I'm the manager of trade advisory services at International Economics Consulting, which we had the pleasure of producing this report on facilitation of cross-border investments in the EAC. And as I understand, I have something like 10 to 12 minutes to present. So I just perhaps a remark that this presentation is perhaps just a very quick summary. And I do recommend to everyone that is interested in reading the full report, which I hope has been made available. So what do we talk about when we're talking about cross-border investments? The African Development Bank defines cross-border investment as all capital flows, either private or public, between countries. So it's any kind of investment that crosses geographical border. Together with the foreign direct investment, both FDI and CBI, they have an important role in sustaining economic growth, as we know that this kind of investment contributes to the potential of transfer of knowledge and technology, the know-how, and create jobs, boost the overall productivity of companies, and enhance the competitiveness and entrepreneurship of companies across the world. Specifically looking at how CBI affects or it is playing, the role that CBI plays within a regional economic community, it is a very strong indicator of the depth of regional integration. When we're looking at regional integration, we usually normally look at trade, But looking at the investment side, it's a very good indicator of how strong the regional integration is between the different parties and the different countries. It, of course, supplements all the sources of foreign direct investment, as just mentioned. It contributes to growth, employment, and the integration of production networks and the integration into regional and further global value chains. And it as well contributes to technology and knowledge transfer. Please, I realize that I might be speaking a little bit too fast. So please, if I speak too fast and my Spanish accent kicks in, so just please do not hesitate to stop me. But why does a regional framework matters? Why does a regional framework matters in the context of CBI and the EAC? Well, the implementation of a regional integration framework for investment, for cross-border investment, it would lead to an increase in competitive sources of funding for domestic firms. It would create a further range of investment opportunities for domestic investors as well. It would increase capital investment in social and physical infrastructure in key sectors. It would lead to longer-term macroeconomic stability and improve further the regional investment potential. The East African community has had a lot of initiatives going on in order to further harmonize and rationalize the investment incentives. The WTO trade policy review of the East African community has been very recently concluded, says that overall, the national investment codes of the EAC member states are rather liberal and they don't find any kind of discrimination between local or foreign investors with regards to even incentives. I did put quite a bit of emphasis on the word national investment codes, because despite the fact that we have multiple treaties, multiple instruments, such as the Customs Union Protocol, the treaty establishing the EAC, the Common Market Protocol, and even the Model of Investment Code, the EAC investment policy, and so on. Despite all these elements being interconnected guidelines and they complement each other, all investment-related framework in the EAC is still country-specific. This is something very important to highlight. It is still country-specific, national-level investment regulations that must be applied with whenever we're entering the EAC on one of the countries of the EAC. I believe he was the CEO of the East African Business Council, was previously giving us some figures to regards to the levels of intra-EAC cross-border investments, and these are overall rather low. We see that from the figures, and I will not go into too much depth just in the interest of time, but we see that in this case, we see Kenya as the main attractor of both extra regional investment, but well, cross-border investment within the EAC. So these low levels of cross-border investment is mainly explained by the factors that you can see on the screen. It's the relatively weak institutional frameworks. There's a lack of administrative transparency. And I would say that the lack of transparency it will lead to uncertainty, and it's one of the worst scenes, or one of the worst characteristics of a framework that any investors would want to avoid. Also, the frequent regulatory changes that the different countries implement also does not contribute to that stability that investors look whenever they are looking to invest into any jurisdiction. We also have the expert dependence and the volatility of the sectors in which the EAC countries operate, and linked to the high bureaucracy and the underdevelopment of financial markets, although we have some green sprouts with Rwanda and with Rwanda as an international financial center that is developing, but still is a little bit on the developing side. All these elements explain why intra-Africa trade, intra-EAC cross-border investment, it's hasn't developed so far, or as much as it should be. Looking at what are the members' commitments in terms of investment under the EAC treaty, we see that, as you see that on the screen, across the different sectors, and you see there are no investment, either seen as a national service, whilst Burundi and Uganda have made the most commitments, Rwanda is the one that appears to have a higher level of liberalization across its schedule. And why would these countries liberalize some sectors and close others? Is just because they want to attract investment. In this case, cross-border investment, because remember, I'm talking about the EAC Treaty one. They want to promote intra-regional investment, cross-border investment into those particular sectors. We see, though, a rather not the same picture whatsoever in what it has been committed at the GATS level through the General Agreement of Trading Services at the WTO. Remember, this agreement was negotiated, entered into force in 1995, and we see that, perhaps with the exception of Kenya, EAC member states have very few commitments with regards to Mode 3 in the sectors at hand. That just means that it doesn't mean that the foreign investors are treated differently than necessarily the regional ones. But it does mean, however, that the regional ones have an additional layer of certainty that third-party investors do not have. This is the main element that I wanted to highlight across, and this is with regards to the market access commitments to the WTO, and we see the same with regards to the national treatment. With regards to, so we have very quickly covered the EAC. We have covered very quickly the commitments on the Mode 3 at the GATS. But with regards to within the African continent, we see that while some regional agreements do contain some chapters or entire chapters dedicated to investment issues such as bilateral investment treaty, the Community Investment Code of the Great Lakes countries, even the Organization of Islamic Countries Investment Agreement, they contain chapter, dedicated chapters with regards to investment. It is not extremely common across African FTAs to which EAC member states are party to. And for example, in the African community, the promotion of investment is highlighted as one of the objectives, while even in the AFCFTA, while we are still, investment issues are still being negotiated as part of the phase 2, we have right now investment is only highlighted in the preamble on objective. This highlighted the disparity of how investment is treated and the depth in which it is treated at the African level. Moving forward at the multilateral level, there has been, and by multilateral, I of course refer to the World Trade Organization, there has been a strong emphasis on the need for greater investment facilitation in order to create more investment-friendly business environment. There is a particular group called the Friends of Investment Facilitation for Development, who initiated an informal dialogue on investment facilitation for development in 2017, which was further pushed through a joint statement initiative on investment facilitation for development, of which 112 WTO members, of which Burundi and Uganda are part of, and they are negotiating a possible agreement on investment facilitation. Remember, we have the trade facilitation agreement that was entered into force somewhere in 2015. So now this initiative aims to promote and facilitate investment. Perhaps just a little bit summary before I move into recommendations. We see that overall, the EEC member states, they have concluded a series of bilateral investment treaties with high levels of specification, accounting for compensation of expropriation, which is quite important for investors, and as well covering transfer of funds provisions. They have also taken a series of domestic reforms and initiatives in recent years in order to push for a further strengthening of their domestic and legal framework. Yes?
You're breaking up. Your connection seems to be buffering.
All right. Well, let me know if it continues, and then I will try to move. But let me just perhaps to wrap up this as well. The EEC have...
No, we can hear you well now. We can hear you well now.
Perfect.
Continue from there.
Yeah, thank you, Nathan. So the EEC have undertaken a strong push for domestic reforms to strengthen the domestic legal framework. They have as well pushed at the regional level to further eliminate barriers to movement of people and capital. Of course, facilitating in this way cross-border investment. And they are pushing as well for the improvement of business environment. As a way forward. Yeah?
Go ahead. Go ahead, Pablo.
Thank you. As a way forward,
helicopters are so
the EEC should strengthen the domestic, perhaps as a recommendation, the EEC should strengthen the domestic institutional and regulatory frameworks to include the liberalization, the regulation, and reduction of bureaucratic loopholes that exist in their legislation, and therefore aligning to the commitments that they have made with regards to the regional integration and regional integration initiatives. They should strengthen the domestic financial markets and create an EAC investment promotion agency in order to facilitate as well these reforms and to create awareness across the region and across the world of the potential that the different EAC sectors provide. They should continue ratifying and implementing their agreements to avoid double taxation and push forward on the reduction of barriers to movements on people and capital among EAC member states. Improving the telecommunication infrastructure in the region is seen as critical to address information asymmetries and as well to reduce investment-related costs that would hinder the attractiveness of an investor to get involved with a particular sector in a particular country. On the regional integration side, as in addition to the EAC Investment Promotion Agency, the negotiation of an EAC-wide investment protocol and a strategy to harmonize, liberalize, and simplify investment policies at the EAC level would contribute again to this objective of promoting cross-border investment in the EAC, and perhaps linked to perhaps a little bit more administrative side, improving the capacity to capture cross-border investment data will enable the different regulators to be able to make better
Let me request people who have not muted to mute and not to disturb our presentation. Go ahead, Pablo.
Thank you. Just finishing. It's just the improvement of the ability to capture cross-border investment data would. I think you're seeing my internal. Yeah. To cross-border investment data would be seen as an instrumental tool, especially for policymakers to make better informed decisions with regards to the different policies, laws, and regulations to adopt to promote EAC. And as well, it's important to focus perhaps not so much on the quantity and FDI that is coming of CBI that is coming in the different EAC member states, but as well on the quality of the same, to make sure that initiatives that are supported to the CBI actually have a repercussion on not only on the investor side, of course, protecting their benefits, but as well on the wider socioeconomic framework that they employ, the communities and the countries where they are based. Thank you very much, and I'm very happy to take any question that you might have.
Thank you so much, Pablo. Thank you for a very informative presentation. I shall hold the questions to Pablo for a while. And then please, those who have questions to make, please note them. I first welcome a presentation on the Barometer on ESC business and investment. Then after the presentation, shall invite our panelists and we go on with interrogating this discussion. May I have Rose Ronald, if I've spelled the name correctly, for the presentation on ESC Barometer on business and investment. Hello. I'm welcoming a presentation on the Barometer.
Thank you so much, Mr. CEO. I'm going to be sharing my presentation shortly. Just to introduce myself, I'm Rose Rono, Executive Director at TradeSmart Consult, which is the consultancy firm that carried out this study on the Barometer of Trade and Investment in the ESC amid the COVID-19 pandemic. So I will be presenting with my fellow consultant, Professor Cheriot, Thomas Cheriot. So let me just put up my presentation. So let me know on your end if you're able to see my presentation and if I am clear.
Yes, Rose, I can see your presentation and you are audible enough.
Okay, thank you so much. I'll just go straight to the presentation itself. So I'll take you through an introduction. I will take you through the approach of the study, some of the key findings and the policy recommendations that we have in this. Also, this is a pretty short presentation, so there is an elaborate document that highlights the main findings and the key recommendations specific into countries. So this is just a short presentation. We will be sharing this in the case that you do not have. We'll be sharing the main document in the case that you would like to read it. So in terms of the introduction, the main objective of this study was basically to develop an ESC barometer on business and investment amid COVID-19. And in terms of the specific areas that we looked at, we evaluated the performance of ESC business and investment. We identified and looked at my macroeconomic background analysis of ESC, key indicators for investment, trade, including FDI stock and trade flows by partner states. Our study also aimed at analyzing key challenges and factors responsible for the current for ESC partner states' performance, the current performance amid COVID-19. We also looked at we undertook a review of the COVID-19 measures, including stimulus packages that the partner states are put in place. We also analyzed the performance trends and views of and confidences of ESC business and investment amid COVID-19. We looked at the impact of COVID-19 pandemic on businesses, the ESC, including assessing how COVID pandemic has impacted business performance. We identified profiles of business and established their views on the performance indicators such as business outlook, business climate, and their performance expectations. Also, we evaluated the perceptions of business in response of the partner states' key measures that they put in place to mitigate against the COVID-19 pandemic. We also identified and assessed the outlook for 2022-2023 in terms of investment, potential challenges, and critical interventions by partner states. And also, in addition to that, to determine how best ESC partner states may implement regional coordinated approach to build better business and economy. So that just speaks to our recommendations and basically strategic measures that they could adopt to recover from COVID-19. So in terms of our methodology, we adopted a mixed research methodology whereby we did a survey. And in our survey, we were targeting firms in the ESC countries of Kenya, Tanzania, Uganda, Rwanda, Burundi, South Sudan. We didn't do DRC because the joining of DRC came in the middle of this study. And basically, we did all the ESC countries with the exception of DRC. In addition to the surveys, we performed key informant interviews with policymakers, with the private sector association leads, just to collaborate some of the findings that we were finding from the survey. So we analyzed this data that we received, did sentiment analysis to be able to come up with a barometer, and also descriptive and comparative analysis and sector analysis to be able to just understand some of the data that we received. So a detailed presentation is in this particular report that we will be sharing, but we will be giving you highlights of our findings in this. So I'd like to invite Professor Cheriot to take it from here, and then I'll come back to explain in terms of our recommendations. So welcome, Professor. Are you with us, Professor? Professor, are you with us?
Rosa, you needed to go ahead with the work. Prof
Okay,
is
then I will go ahead in his absence. I will go ahead. Apologies for that. So in terms of the results, I'll just start by going through the demographics. Our research just observed that majority of our respondents were male. And in terms of the age, you can see from the age, a majority of them were middle-aged, between years of 30 to 39 years. And then we also had quite a number also who were above 50. Level of education, you can see from the level of education, it was pretty varied. Some of them having postgraduate, some of them have undergraduate, so varied levels of education. Also, majority of the firms that responded were from Kenya and Rwanda, which both attributed to around 23.7%, followed by Burundi, Uganda, and Tanzania, respectively. We had very low response rate from Southern Sudan, and despite a lot of follow-up. In terms of the businesses that who responded to our study, most of them were in the urban areas. And those who operated from the rural areas comprised of around 37%. So that is in terms of the demographics. In terms of the sizes, we have micro enterprises, who are the majority of the respondents at 58%. And then we also had small enterprises at 23%, medium enterprises at 7.6%. And then also the large enterprises accounting for around 4.2%, and medium around 6.9%. In terms of how long they have been operational, majority of them had been operational for 1 to 5 years at 48%, and the rest of them more than 10 years. And there was also those who were less than 1 year. In terms of the proportional sample, the firms that were the proportion of the samples operating in Kenya, for the firms operating in Kenya, around 20.6%, Rwanda 18.7%, Uganda 16%, Burundi 13.7%, Tanzania 11.5%, South Sudan also, as I had mentioned, had 1.5%, which was about a bit low. Most of the firms that we talked to had an annual turnover of around $0 to $5,000. Those were 42.4%. And then those who were between $5,000 and $50,000 were 37%. So those with an annual turnover of 50,000 to over 8 million were around 16%, and only 4.6% of the businesses had a turnover of 8 million. So those are our demographics. So in terms of the findings, the overall findings, and I say this because of time, we will summarize, and you can go and look at the specifics in the main document. We were looking at the overall financial performance. And in terms of operational or financial performance, the findings showed that there was worsened performance during the COVID-19 pandemic in all the 6 EAC countries that we talked to. So there was overall a dip in performance. In terms of the number of employees affected by the COVID-19 pandemic, employees were affected in different ways. There are those who noted salary cuts, massive layoffs, utilization of skills, to offer individual services, also depression due to unexpected cuts. So there were varied ways that employees were affected. In terms of cost of labor, we also looked at the cost of labor, and the findings were that it decreased. The cost of labor to firms that we talked to decreased during the pandemic, and this, you can see, is very consistent with the low levels of operations during the pandemic, where firms were forced to cut down their workforces in order to survive. In terms of cost of doing business, There were mixed sentiments. There were those who indicated the cost was high, some indicated cost was low. So we can go deep into the report and just look at that. Cost of logistics, a lot of them felt that it increased during the pandemic, and even during the recovery, the cost of logistics, they noted that increased. The rate of investment during the COVID-19 pandemic, the rate of investments were reported to reduce. And this also was collaborated by the data that we obtained from the FDI stocks that are normally reported. During the recovery, there was an improvement over the pandemic period, but still the levels were reported across the countries as being pretty low when it comes to investment. Cost of acquisition of materials also indicated perceived increment during the pandemic, and there was also minor variations, but this really corresponds because the pandemic affected the global regional value chains and also the global, both the global and the regional value chains. In terms of the challenges that businesses faced, we asked them what challenges they faced, and you could see lack of customers there being one of the highest challenges, followed by lack of finance, reduced sales volume, high financial costs, reduction of employees in terms of working hours, unfavorable laws and policies, self-doubt, fear, difficulties adjusting to remote work, lack of social support, inadequate networks and connections, lack of mentors to guide business, inability of to meet contractual obligations they had, and availability of skilled employees. So you can see there, those were the challenges that the businesses noted that they faced during the pandemic. So in response to these challenges, we asked them what survival strategies that they put in place to respond to these strategies, and they looked at new ways of getting customers. So some of them noted, using online platforms, remote work for some of their staff, new delivery ways of products, changing in operation times. Some of them closed temporarily, negotiation with their suppliers, reduced prices of commodities. Some diversified into other services and products. Employees took salary cuts, expanding into new markets, restructuring of loans. Some relocated their businesses, others downsized and restructured. Others also utilized government packages, the stimulus packages that we are being given by the several partner states, and also mergers and buyouts also happened during that time. So you can see a lot of, in terms of the survival strategies, some of the top such survival strategies they put in place is in relation to their customers and also in relation to their employees. So in terms of the COVID-19 measures, we also asked them what COVID-19 measures mostly affected their businesses. Curfews rated the highest in terms of affecting their businesses, border closures, banning in-person meetings, restriction of movements, banning public gatherings, social distancing, requirement for COVID-19 testing, airspace closures, requirements of letters for provision of critical services, wearing of masks, requirement of temperature checks. So all this they cited as having affected their business the most, but you can see there the curfews and the border closures are the ones that were rated the highest in terms of affecting their business. So in terms of the overall outlook, in terms of the different countries, you can be able to see there the best outlook there is Tanzania having the highest in terms of the outlook, followed by Rwanda also having a relatively good outlook towards recovery from COVID-19, followed by the other countries. You can see Uganda there had really low outlook. The businesses there they were not very optimistic in terms of the outlook. I think in terms of after the COVID-19 outlook of recovery after the COVID-19 in relation to business activities and the business performance, you can see really, good in terms of outlook, explanation in terms of outlook. They all had, positive positive outlook that their businesses are going to recover. In terms of what influence most, the factors that influence most their business decisions going forward, or looking at what is going to influence them to invest more post the COVID-19 pandemic, political stability was cited the highest, competition, business environment, technology, tax regime, availability of raw materials, cost of labor, transparency, cost of utilities, for example, electricity, trade agreements, legal environment, and foreign currency in that order. So with the top three being political stability, competition, business environment being very critical, them citing it as being very critical to business investment decision. So in terms of the sentiment analysis, the barometer was able to, from the data that we gathered, we saw that the businesses had confidence levels that their businesses are going to improve. They are going to improve to a level of around 11% in the coming years, which are 2022, 2023, which is a reasonable figure. At least they are not talking about their businesses becoming worse. So I'll summarize by going through the key policy recommendations for particular countries. So specifically for Kenya, most of the businesses cited subsidized inputs and services, followed by unemployment benefits. In Uganda, they talked about unemployment benefits and also rental subsidies. For Tanzania, they looked at most of the businesses reported as having, they felt that, if the business environment was improved, then they would be able to do better. Then for Burundi, improved investment climate and reduced employees' income tax. Rwanda, cash flow transfer by assistance. And then for South Sudan, also cash transfers. So these are some of what the businesses said specifically. But on overall, our recommendations in terms of recommendations overall on the report, one of the recommendations that we feel that is important is coming quick resolution of non-tariff barriers, and we saw some of those aspects as closures of borders really affecting the businesses and the movement of raw materials. Then improved investment climate and favorable government policies are also recommendations that were not only cited by the businesses, but also we feel that would be important in terms of the specific government interventions. Provision of corporate taxes and tax breaks. I think also this kind of support would probably be important to go on during the COVID recovery, not only during the COVID pandemic. Then also provision of low interest loans and restructuring of current business loans, ensuring rapid delivery of SME and entrepreneurial policy, support by simplifying access to support and ensuring effective support basically for SMEs. Then other recommendations in terms of assistance to access additional markets, reduce income tax for employees, provision of subsidized business inputs and services, provision of business premises and utility subsidies, cash transfers, strengthening regional value chains, then setup of competitive sectors, building economic resilience, enhancing strong structural components on financial flows, harmonization of regulatory bodies by EAC partner states. So these are strategic recommendations that would be very important, especially being addressed from the regional level. Harmonization of tax regimes across the borders, resolution of political differences, harmonization of policies, especially trade regimes, implementation of the Monetary Union Protocol, key trade support areas, effective implementation of free movement of persons protocol within EAC states, and then EAC partner states also to work on trade credits, encouragement of business formalization, facilitation of easy access to funds. So those are some of the strategic recommendations that we are giving on this. So I think this is a summarized presentation. but a detailed report is available for your review. So back to moderator for questions.
Thank you very much, Loz. Thank you for a very detailed presentation. I'm going to welcome our panelists, and at the end of the panel, I will also invite CEO for the launch of this barometer. But meanwhile, let me recognize the presence of Mr. Robert Bwire from Kenya Investment Authority. Are you present, sir?
Yes, I'm present. I'm present.
Thank you very much. Yes, we can hear you, Mr. Robert, and thank you for responding positively to this call. If you can hear me well, please take the floor. I also and go straight to the discussion by telling us how do you rate private sector understanding of the existing requirements and regional framework and operating environment for cross-border investments in the EAC. Then, Mr. Robert, you'll proceed and tell us what should be the potential interventions done by investment authorities like the one you represent, the Kenya Investment Authority, to facilitate cross-border investments in the EAC. I know you've done some work. I know some Kenyan companies are present all over in East Africa. What do you normally do to facilitate them? Thank you very much, Robert. Please take the floor.
Thank you very much, ESC, EABC, all protocols observed. I would like to go straight to the point, is that how do we rate the private sector understanding of the existing requirements and operating environment? Now, from our opinion, the region does not have a harmonized regulatory framework that can guide cross-border investment. It therefore boils down to responsible ministries, agencies on the part of governments and private sector associations to avail the necessary information on these requirements. Now, when it comes to understanding of the requirements by the private sector, there is no uniform barometer to gauge this, given the independence of each member state in regulating business within their borders. However, liaison among agencies responsible for investment facilitation within EAC member states usually helps in filling up the void created by absence of a coordinating regional investment promotion agency. Kenya usually takes the necessary steps to enlighten the private sector across the region through the IPA workshops and quite a number of forums, particularly with the business development support unit, where we go around the country in counties to sensitize the investors and create a base for partnerships. The private sector understanding of existing requirements and regulatory is therefore limited to each country. However, now I'd like to mention something on the part of the EAC. When we talk of this issue of facilitation, my request to the Secretariat with the support of EABC, I go back to the year 2008. There were 4 studies that were done by the Secretariat. One, a compendium of policy, legal, and institutional framework for investment in EAC partner states that require harmonization. 2, EAC investment policy and strategy framework. Number 3 was compendium of sector and project profiles to be jointly marketed by EAC partner states. And finally, there was number 4 was EAC cross-border private investments among partner states. My request to the Secretariat is to update, to redo these studies with clear implementation timelines. It's like before we move forward to cross-border investments, we need these strategies done, and I hope that they are there on behalf of the Secretariat. Please carry that information. Okay, then briefly, the other issue you told me to touch on was the potential of interventions done by investment authorities to facilitate cross-border investments, the EAC. Now, on the part of Ken Invest, we have employed a proactive approach by engaging our counterpart IPAs within the EAC region. This we do so by proposing and signing MOUs with investment authorities, member states. We have already signed an MOU recently with Tanzania Investment Center in areas of cooperation, but limited to priority. And there are ongoing discussions with Burundi Investment Authority. It will be the entire to develop an MOU. A draft is already in place, but we shall be taking that to the entire EAC region. But as stated earlier, we also need to utilize any available opportunity to enlighten private sector on what to invest. Now, there's a concerning outward FDI. So in recent studies, Kenya was rated second to South Africa in terms of the number of investment projects. So in our in the Kenya investment policy, although we've not implemented, but we, in terms of outward FDI, we would like to develop collaborations with other countries to identify viable investment opportunities for Kenyan investors, and also create an outward investment unit within Kenya Investment Authority, focusing on helping domestic investors with FDI, particularly in regions where the country has investment or regional agreements in place, and that includes the EAC. It is our desire that any outward investment from Kenya should first of all land in the EAC, and that we do. There are many ways. Let's not forget the investment conferences that the Secretariat used to have. There should be a platform, whether annually or biannually, where we can, where EAC countries can showcase their potential. Just to mention, was it when we had the last devolution conference in Kenya in a county called Makueni? Among the stands, we had 2 investors from Dar es Salaam who had come all the way to Makueni. Those are the kind of things that are very impressive. We need to build upon that to promote our DDI. And another area that we are doing is the e-regulations. It's an actor supported platform where we continuously update investment laws and regulations and procedures into a portal. And the e-regulations team in Kenya assisted EAC countries, particularly Tanzania, Uganda, and Rwanda, in implementing trade information portal as per WTO agreements. But we'd like a situation where the EAC should also could approach UNCTAD or maybe you do it with your resources, so that we have that portal where our investors, the local investors, can get access to whatever information that they require. Yes, is there a comment? Oh, okay, sorry. Another issue, just to, I talked of the promotion. There's funding. The Secretariat, please, you have to bring up the issue of funding of investment promotion agencies. We need to be, all need to be funded. I remember, was it early this year where the Secretariat was proposing an investment mission in India? We wouldn't, okay, it didn't take off, but it would have been done that to have excuses like there's no funding for that. I hope I'm not taking too much time. I'll just like to touch on another issue that is the EAC model investment code, which Deo mentioned. It is not binding on partner states. We have been looking at it for quite a number of years. It is actually not binding on partner states, and that creates a problem because I don't know if any investment promotion agency that will actually take an activity and they say that we are doing it as per the EAC model investment code. If it's not binding, it doesn't apply. And then the last issue I'd like to bring out is Rwanda Development Authority have no hard feelings among you. It's an IPA that basically well known. But we feel the investment promotion agencies ought to be standalone. In Africa, we see some merging of the IPAs with the trade associations, and the tendency should be to strengthen the investment authorities and the Secretariat to look at the possibility of having an ESC investment agency to coordinate all these efforts. FCTA is coming up, we need to make a head start. Thank you very much. That's my contribution.
Thank you very much, Robert. Your contribution is most welcome. Maybe participants will interrogate later. Let me welcome Victor Wairimu. Victor Wairimu is a senior manager from the Equity Bank of Tanzania. We have seen financial services being integrated at ESC level. We have seen equity investments across all partner states, if I'm not wrong. So Victor, are you following me? Can I welcome you and request you to discuss on cross-border investment opportunities by private sector in the ESC, and at the same time share your experience, because you are from Equity Bank, on what this private sector face as challenge while investing across ESC partner states. You are most welcome, Victor.
Thank you very much. Good afternoon, everyone. Hoping we're all in the time zone, the East African time zone. Thank you very much for the introduction and also the honor of being part of this panel. My name is Victor Wairimu, representing Equity Bank Tanzania and in general Equity Group Holdings. Of course, from the kind introduction, Equity Group Holdings is one of the biggest cross-border investors in Eastern and Central Africa, with a total investment worth $13.5 billion over the 20 plus years that Equity Group Holdings has been in existence. In terms of what Equity has been able to achieve across the region, it has been able to become a systemic Pan-African financial services holding company listed in the Nairobi Stock Exchange, Uganda Securities Exchange, and Rwanda Stock Exchange. This goes to show the strides that Equity has done in terms of ensuring the investment is spread across all the 6 subsidiaries. Maybe just to begin with some of the problems that, of course, private sector players have in terms of cross-border investment. I believe most have been read out by previous speakers and previous presenters in the panel, but just to highlight a few. For example, I think one, we talk about the poor cross-border investment infrastructure framework. Is there a clear guideline? Is there a clear support structure that private entities can rely on when looking at cross-border investment? And maybe from an East African Business Council perspective, something to consider would be a platform that allows cross-border investors to be handheld in terms of course, navigating through the regulatory environments in our different jurisdictions, navigating the different rules and regulations that govern operations in some of these jurisdictions. And of course, just to highlight the lack of unified systems across the East African community. To process transit of goods within all the different countries that we have. But you look at the complexities of moving unification in terms of cross-border investment. Of course, the lack of harmonization between government agencies and private sector. I believe this is the right time to come together to have a plan that, of course, inclusive of all the players in the market. This is in regards to the private sector and the public sector. Something that touches economic plan. I believe what has been played out previously and what has been mapped previously is an economic plan, but we have to factor in all the citizens that are key players in the East African community. We are talking about 100 million plus people living and operating within the East African community. So what steps have we put in place to make sure that we are including them to have a socio-economic platform that allows for all players to contribute, of course, to the growth of the East African community? Overall approach in terms of having different players from the private sector, public sector, coming together, looking at what they should do and looking at how to do it. And just briefly to talk about something Equity Group has been passionate about. We recently launched our Equity Group Africa Recovery and Resilience Plan. That's planned to stretch across 5 years. This is a plan that strives to catalyze the socio-economic transformation of the region in a socially, ethically, and environmentally sustainable manner. Being a purpose-driven plan, inclusion is a centerpiece consideration to ensure nobody is left behind. And again, the plan, just to make sure that the plan is successful, it's anchored on sustainability and governance. And this involves an investment of 6.1 billion USD across all the East Africa member states under 6 pillars. These 6 pillars, again, are ecosystems of natural resources in agriculture and extractives. This allows for more coordinated, connected, and capacitated supply chains and mechanization that will drive higher throughput of raw materials and ultimately lead to a more inclusive industrialization of East Africa. The second pillar is manufacturing and logistics ecosystem, where we have a very big opportunity to leverage off and expand existing productive capacities to industries by connecting to global value chains that are in the process of regionalizing and diversifying. The third pillar is trade and investment. This involves access to new markets, access to new technology, access to capital, and necessary skills that will enrich and enhance offtake of African products and services, with a specific interest being our market, East Africa. The fourth pillar is a deepened focus in micro, small, and medium enterprises to ensure that there is connectivity of small businesses into formal value chains that will drive inclusive, broader, and more sustainable goals. The fifth pillar is the social and economic transformation that involves capacity building of value chain stakeholders through smallholder farmers and MSMEs that will drive productivity of East African value chains. And the final pillar is technology-enabled economy. This is one of our very big investments that we seek to provide integrated financial technology services that make cross-border investment easy. And you cannot talk about cross-border investments and not talk about a financial vehicle that will deliver the investment to wherever you need to be. So this is one of the key interests that Equity Bank is working on, Equity Group, sorry, in general is working on. And the objectives that we plan to achieve by 2025 include inclusivity of 100 million customers. This is basically covering the East Africa region, a multiplier effect of 5 million borrowing businesses and 25 million borrowing customers, employment of 50 million people. This is, of course, from the 5 million MSMEs that we are targeting across the East African region. We anticipate that they will directly generate 5 jobs each, leading to 25 million direct jobs and a further 25 million indirect jobs created through the value chain and expansion and deepening of the East African value chain. Sorry, there's a bit of background noise. And the fourth objective.
Emmanuel, please mute yourself. Someone is disrupting the presenter, Nathan.
Apologies for that.
Let me request people to pay attention on muting and unmuting so that our presenters, our panelists are not disturbed.
Thank you. And the fourth objective that we are looking to have is additional private sector lending in excess of almost 2% of the regional GDP. The regional GDP, and I saw a figure there, was stated to be around $150 million. We're looking at directly increasing this to a tune of almost 2%. So this is a very big move, specifically from a private sector, and looking at diversifying this investment in 3 areas, which are very key for the East African community. 65% of this will go to MSMEs, 15% will go towards manufacturing, and 30% will go to agriculture. We know that through agriculture, manufacturing, and MSMEs, we can power East and Central Africa, or the East African community, to become a powerhouse, to become a center of excellence, and of course, a hub that will be looked at as an example across Africa as a result of the private sector and the member states coming together, having a focus that is improving the lives and livelihoods of the people in our region. So that is part of our Marshall Plan as Equity Bank, of course, because due to our experience and looking at the playing field that we operate in, the years that we've operated in the market, and the vision that we have to serve the people of East and Central Africa. So thank you. I will take any questions during the panel session. Thank you.
Thank you very much, Victor. Yes, you made it clear. Cross-border investments should be accompanied by financial packages. Last week but one, I saw the head, the overall chairman of the Equity Holdings, Dr. James Mwangi, signing MOUs with EAC. Basically, it was looking at how to finance the cross-border investment. Thank you very much. For other questions, participants, hold on with questions, and Victor, be ready for some questions thereafter. Let me welcome my senior brother, Pacific Tishime from Rwanda Development Board. I have ever heard the CEO of Rwanda Development Board, that this question goes to Pacific, while I welcome him, when the CEO is saying that start small in Rwanda and grow big in the region. So, brother to Pacific, what alignments required to achieve seamless flow of cross-border investments in the region? We have very many frameworks now. We have the Rwanda Investment Code. We have the EAC facilitation, investment facilitation arrangement. We have WTO. You saw the presentation from Pablo. How are you aligning all these frameworks so that we have seamless flow of cross-border investments, at the same time benefit from this expanded market? Because my humble understanding is that when you invest in a small market, then your products cannot reach the big market other than targeting the big market and therefore harmonizing the policy frameworks. Karibu sana, brother Pacific.
Thank you, Nathan, for the kind introduction. And first, I would like to start by commending really all the work and the presentations made in today's webinar. Now, to answer your question on how do we align all these various frameworks. Now, you mentioned a few, but I think there's also another one that I needed to add on top of the WTO one, and there's the upcoming AFCFTA investment protocol that's also being worked on. And I think earlier in the presentation and the discussions, they were mentioning of various document and model codes that were enacted actually several years ago, but that have not really been adopted. And so we see that there's still a lack of harmonization across the various investment codes or investment policy document in the East African region. So what I would say first is the path towards further alignment. Let me first share the RDB perspective and maybe speak to the gaps that we see and outline really that this is still a work in progress in my view. Now, first and foremost, the perspective of most IPAs or most investment promotion agencies is to encourage inward investment. But across today, I think a concept was mentioned of outward FDI. And I think looking at it from the perspective of an East African community member, it's not just about each country has a responsibility beyond attracting investment within its own borders, but also encouraging investment, cross-border investment into other East African community partners. Now, the main tool that we have as an investment promotion agency is our investment code. And that provides for mostly fiscal incentives, but also contains a few non-fiscal incentives. And these fiscal incentives come responding to an existing tax regime, a collection of national policies, laws, regulation, and domestic taxes. So as all of you know, a lot of work has gone into harmonizing the tax regime, mostly around customs duty, but there's still further work to be done in the harmonization of national policies and regulation relating to domestic taxes, such as VAT, CIT, excise duty, and so forth. So when we talk about the alignment of investment policies across the East African region, there is an inherent interconnectedness with the harmonization and the alignment of various tax policies, domestic tax policies in those countries. So one will come as a response to the other, and up until we really reach some alignment, there's going to inherently be some variation in the way those investment policies are reflected. A second point that I would make that we also have to acknowledge is the investment policies or investment codes that each country has reflect the economic priorities that each country has. And given the diversity present within the East African community, it's going to be expected that there's going to be some variance in terms of the approaches that are taken. But at the same time, this was mentioned again throughout the webinar, and I think it's the kind of intervention that the Secretariat should support and that could really allow us to fast track this process. It would be very helpful to have a regional investment promotion agency that is able to look sort of at the bigger picture in each country and then try to find the synergies that we could all adopt and look to in order to fast track the economic development across our countries. And maybe another area that I would touch on is the approach around Mode 3, around commercial presence. So the stand that we take as Rwanda is that we treat East African community members as the same way we treat national citizens, as the same way we treat Rwandans. And we try to reflect that and articulate it clearly in our investment code, but also through the various other policies and procedures that we have. But it is the case that I think, although most members have the same commitment, in practice, at times, what is reflected at a high level of commitment is not fully implemented. And that puts some limitation in our capacity to enhance cross-border investments across the East African community. So that is something that I think we need to look into in terms of administrative processes, red tapes, and other sort of bureaucratic impediments that are especially more pronounced when it comes to non-citizens and would apply to other East African residents. And really looking at, again, having a regional investment promotion agency would allow us to identify best practices and follow up on the implementation of those practices and the codification of those practices within the domestic investment policy agreements. And again, coming back to this theme of outward FDI, so I'm going to touch on the statement that you made that our CEO sometimes says, and this is really how we think about it, which is come to Rwanda, start small, but think regionally. Think don't aim for a market of 11 or 12 million people, aim for a market of 100 million people. Now, what that means is that eventually you will need to expand your operations and set up in all these other countries. And so at that point, it's really critical for an investor to understand the processes that they would need to follow, the requirements that they would need to follow, and then the incentives available to them in all those countries. So there's a bit of a lack of information, and you find that what most IPAs are familiar with is the path through their own country. But even I would confess that I'm not fully able to articulate how, as an example, if you start, I'll just pick the example of the colleague who spoke before me. If you're to start a financial institution in Rwanda and succeed, and then decide to set up an office in one of the other member state countries, exactly what that would look like. So I think if we start to think of ourselves more practically as a common market, and essentially lay out the roadmap for how one enters into the various markets across a variety of sectors, it becomes a lot more powerful, I think, in enhancing the work that we do of promoting and attracting investments within the region. So as far as alignment go, if I had to really summarize the approach that we should take, that we should continue to take. The first point would be to understand that when it comes to the investment promotion, investment attraction codes that we all have, that these come as a response to national policies, so that harmonization of these national policies and national laws and regulations should be fast-tracked, and this would allow concrete discussions on how we harmonize the investment codes that we have. And then the second component would be really the creation of this regional body that would allow us to think not just about incoming FDI, but also to really underscore this concept of outward FDI. And finally, having clarity on processes, not just incentives, but really on processes and various red tapes, and ensuring that this national presence commitment that we've all made is actually adhered to in practice. So I'll pause here, but we'll welcome further questions. Thank you.
Thank you so much, Pacific. It's time now. Before we proceed to open the discussion for all participants, do we have anyone from Uganda Investment Authority? We had invited Mr. Muchiza Robert to be part of this engagement. If he's in the call or his representative, let me know. Is there anyone?
Yeah, I thought the communication had come through. I've been talking to people all this morning.
Yeah, you are most welcome, my brother.
Peter, introduce yourself, please.
My humble request is that after your introduction, go ahead and tell us what should be done to strengthen domestic, institutional, and regulatory systems to have deeper regional integration towards facilitating intra-EAC investment flows. And in addition to that, please suggest key sectors of interest to promote cross-border investments in the EAC. And lastly, do you support the idea to negotiate and implement an investment protocol at EAC level? You are most welcome, sir. Thank you.
Thank you, Bwana Moderator. My name is Peter Mramira. I'm the Deputy Director, Business Facilitation. I represent Ndugu Robert Mukiza, the Director General of Uganda Investment Authority. I embrace this initiative and this discussion, following on to the previous speakers, both be it in the government arm of Kenya Authority and the last speaker at, representing Rwanda Development Board, and colleagues both from the public and private sector present. I acknowledge all the submissions made, and I thank you for putting us together for this engagement. At Uganda Investment Authority, first of all, I would like us to specifically highlight that we are very appreciative of such efforts that bring us together, not just even as East Africans, but as Africans. So we believe that initiatives in this direction will not only spur economic development, but also will encourage participation at each individual level of the country. So I'll just go straight to the question that was set before us. How do we strengthen domestic institutions? I think the bigger question here would be, how do we empower them? How do we empower them is to basically go through the existing structures to ensure that we bring harmony in what the investment code in Uganda is saying, what the investment code in Rwanda is saying, what the investment code in Kenya is saying, and the surrounding countries regarding both investment promotion, but also in respect to facilitation, which touches on issues of a neighboring environment. My earlier speakers did mention an important area of barrier removal. How do we recognize ourselves as one country? How do we recognize seamless flow of trade between each country? I look forward to a point, for example, where whenever I'm traveling abroad and marketing Uganda, I always look forward to a time when I am making a presentation on behalf of East Africa and showing the tourism opportunities in East Africa, rather than talking about our small Uganda tourism opportunities. I look forward to a point where Kenya is talking about how Mombasa is opening up the trade for the whole region and speaking on behalf of the region. So how do we get a level of seamless trade? One key area would be to harmonize these investment agendas and have ensuring that these protocols are speaking to the same free movement of persons, common market, and formalization of initiatives in that regard. Number one. Number two is ensuring that we categorically draw a roadmap towards these initiatives. I think what has been happening of late is where we have open-ended engagements that we don't have timelines to. We need to define our roadmap so that we put times to these implementation agendas where we are saying, okay, if we have agreed that we are going to do adoption of these agendas in these countries, what is the deadline? And then we convene as, for example, IPAs in the country, and we deem it necessary through our principles to ensure that these things are happening. And I've tested it, it works. For example, in the last just 3 months, we have concluded joint permanent commissions between the Republic of Tanzania, the Republic of Burundi, the Republic of Southern Sudan. These joint permanent commissions are addressing these particular issues, and these are efforts that are working. What do we do in these joint permanent commissions? We set deadlines to specific initiatives that we agree between the two countries. And then we task members of our principals, both in the different countries, up the level of the minister, so that it now becomes a cabinet issue. And from the cabinet, then the highest officers in those countries make a call. So I would like us to embrace areas of joint investment promotion, areas of joint promotion initiatives, joint investment and trade agendas, and also lastly, as my good colleague from the Rwanda Development Board did highlight, can we then at that point start talking about priorities, set priorities by country, and say and ensure that as far as our economic policies, political policies, regional strategy, we are aligned as far as these agendas are concerned. The question that follows that talks about how do we identify and suggest key sectors of interest to promote for cross-border investment. Key sectors that come into my mind immediately is what I think our colleague in the European Union did highlight properly for issues of infrastructure to be addressed. We need that space to be clearly improved. Today we are talking about the standard gauge railway in Kenya. Can it connect completely to Kinshasa so that now we have an SGR that is connecting in less than 5 hours to Kinshasa from Mombasa. We want to see that impact free movement of people, but also free movement of goods, so that businesses that are operating between all the regions, all the countries in the region are enjoying that lateral movement of goods and services. Number one. Number two, we are looking at agro-industrialization at Uganda Investment Authority. Why are we looking at agro-industrialization? We have issues of food security to address. Once we have a good supply of food, and we have guaranteed our people, our communities in East Africa, stability of food supply, then we are having a productive population. A productive population then ties in properly into our industrialization agenda, as far as ensuring that there's good labor supply. But of course, we also recognize that each country will have its own comparative advantage as far as this agro agenda is concerned. So we are also saying, can we segment and say that, look, Uganda is good in coffee, Rwanda is good in cotton, Kenya is good in tea. So how then can we concentrate on where we have comparative advantages so that yields are high, and then we grow as a region? The other three sectors that I would like us to focus on, I propose, would be petroleum development. That goes without saying in terms of powering our energy sector. Tourism development, I highlighted the issues around opportunities for tourism. How do we, for example, have these centers connecting roads, for example, to our tourism sites be improved, and have a joint agenda as far as laying out and marketing these key tourism points as a region. In Kenya, in Rwanda, in Uganda, there are those pillars of tourism that stand out. How do we ensure that we market them on each other's behalf? When you're talking to tourists in Switzerland, in Zurich, how can we then market those opportunities as a region? Then we are talking of mineral development. The other day you heard, of course, that we've hit gold as Uganda, and that is just Uganda. What more gold is out there? Can we go back a step back and say, let's go into the exploration of these minerals together, and let's identify opportunities in the mineral space and develop an agenda for mineral exploitation as a region. Finally, is what our brother from Equity spoke about, which is financial infrastructure. We believe that infrastructure that is feeding finance gaps are still very wide, especially in agriculture and manufacturing. So coming in at a point where either we are organizing finance for our different clusters of investors that feed into traders, to ensure that they are benefiting from this and giving equal share as far as guarantees are concerned, as governments of East Africa, to ensure that where funders like Equity have got an issue, can we agree that we give letters of comfort, for example, or sovereign guarantees, so that we are singing from the same hymn sheet. Today, you might go to Kenya and get a sovereign guarantee as an investor, but when you come to Uganda, then we say, no, we are not giving a sovereign guarantee. The easiest thing we can give you is a letter of comfort. Can we harmonize in that space and have protocols that can happen seamlessly? I'll now jump into the last question. Do you support the idea to negotiate and implement an investment protocol and strategy to harmonize? Yes, absolutely, yes. And this is because of the reasons I've given, the returns to the agenda, to, of course, have a protocol that eases flow, that makes us have interaction between business to business, to have, for example, taxes that are incentives that are tax and non-tax that are working for our investors, and having common, for example, ventures into these sectors that I've mentioned, all will be a good sign for our agenda. I acknowledge the presentation earlier that came through while discussing the barometer, where, of course, we are recognizing that there are different strategies around how.
My brother, can you summarize? Can I summarize? We need to conclude this meeting in 5 minutes. If you can just give a concluding remarks on your presentation.
Indeed. Absolutely. In terms of the COVID and the strategies that are coming to eradicate the impacts of these challenges, can we also, through our relevant ministries, come together to ensure that we are designing strategies that are for the best interest for all the communities of East Africa. Thank you.
Thank you very much, Mr. Robert Muramura, for 2 key areas.
My name is Peter Muramira, not Robert Mukiza. Peter Muramira, kindly.
Yes, sir. Apologies. Thank you, Peter. You advised on marketing EAC as single investment destination, and we are taking note of that in our recommendations further. Now, we are managing time and we are short of time, as you can see. Let me allow the CEO of East African Business Council, Mr. John Bosco Karisa, for two things. One, launching our barometer. Two, closing for us. Then after our CEO, we shall welcome the representative of the EAC Secretariat, Mr. Deogracius Mbarara, for his closing remarks. For those with questions, please write them in the chat as we take note of this. Thank you, CEO. Karibu sana.
Yeah, thank you. Thank you very much, Moderator Nathan. And I want to thank all the panelists for the excellent work in terms of discussing the investment opportunities and the challenges that we need to work on the EABC as EAC in terms of deepening our cross-border investment. So I want Madam Rose, who presented the barometer, perhaps to put on her camera so that we officially raise the report and officially endorse the report. So Rose, first of all, to thank you and your team for the good work you've done. It has been an eye-opener to look at the perception and the impact of COVID on trade and investment in the EAC, as well as giving both specific policy recommendation, as well as the regulatory framework we need to work on, so that this region remains very attractive in terms of doing business as well as investment. So with that, Moderator, allow me to invite also Deo from EAC. And I don't know if the representative of GIZ is on the call, so that we officially launch this report. If they could put on their camera, the GIZ representative and Deo from EAC Secretariat.
Yeah. If you may allow, I think if Flavia is on the call, can also join in.
Yes, I would appreciate Flavia Businje, the acting director for
Monica,
Customs.
and also Monica Hangi from Timea. If
very good. Monica Hangi, the country director for Trademark, United Republic of Tanzania. We want to again appreciate you, appreciate the support and wisdom and insight you've provided in terms of improving the business environment in the region. We do appreciate the role played by Trademark, very cardinal. So I think if they are not on the call, if once again, Deo, as you represent the SCG, we want to officially launch this report and also take the recommendation. So allow me to give you 1 minute to give a few remarks, then we officially launch the report.
Thank you, Chair. And I think due to the internet connection, may I switch off the camera, if that's okay?
Yeah, it's okay. It's okay. I wanted to see that you are visible and the communication team have taken the photos.
Oh, thank you, Chair. Mine first is to appreciate the presenters. I know the time was limited. I know most people would have wished for this session to be interactive, but I wish to appreciate everyone that has participated. I wish to acknowledge the presence of Trademark East Africa. It's good to see them here. And I also wish to see the other representatives from government. I've seen also Gladys GK. I think she's attending from Accra. And then I want to appreciate Pablo for the presentation from Africa Rise, Trade Smart Consult for this barometer, and also all the IPAs and all the comments that I've put forward with regard to promoting or marketing the EAC as a single investment destination. Some of the issues with regard to information, I would like to advise or just request them. There's an EAC investment guide which provides in terms of information for all the EAC partner states and with a link to all the IPAs. The link is provided in the EAC the EAC website. So that can be found there with regard to information on investment opportunities and the requirements for investing into the EAC partner states. And I think some of the issues, I'm not sure if I'm supposed to respond to it now, ED, but I've taken them note, and then
no, I think we have taken note. We'll have to, and I see a number of participants have shared their email and the question in the chat. Nathan and my team will collect and correct this information. Then we'll be able to provide adequate response. But a number of them are very good recommendation.
Perfect. Yes, and so lastly is to thank you, Nathan, African Rise, for organizing this. Let's keep this channel open. It's good and it's informative. And I like to see the IPA opening up in terms of how we market the region as a single investment destination. And I welcome all the inputs and the recommendation. We look forward, as per one of the recommendations, coming up with a roadmap in terms of actionable recommendations and with specific timelines. And we look forward to receiving those recommendations. Thank you, Chair.
Thank you very much, Deo. Yes, thank you. And I want again to officially launch the report. And again, thank the author of the report, the professor, and Dr. Lorna Rose for excellent work done. Allow me to thank our donor, GIZ, for their financial and technical support they have provided to ensure that this exercise is a very success. So I want to thank my team, Adrian and the communication team for putting all the inputs to this excellent work. Of course, with the support, I want to thank Nathan and Patrick, who have been working tirelessly to make this event a success. Lastly, once again to commend the efforts, the partnership between EABC and EAC Secretariat, especially the private sector development unit. The work that we are tasked is bearing tangible fruits, and I think we need to continue to enhance this technical working group. Of course, with the funding from our donor EU Africa Rise, we look forward for that, and the GIZ, of course, not forgetting Trademark East Africa. They have been the anchor of trade and investment in the EAC and supporting the private sector activities to ensure that this region generates the prosperity we want. So kudos to everyone, and I want to again thank the panelists from all the investment promotion agents for the good work, and the recommendation having a common roadmap is very critical. So we commit ourselves again as the EAC and the EABC to ensure that the recommendation presented during the webinar are implemented, and where we have challenges, we'll be able to elevate or escalate them to the Council of Ministers. So with that, I want to wish you a very good weekend, and I want to thank everyone, all the participants, for sparing your time. 2 hours is a substantial time from your busy schedule to participate in this event. This really underlines the importance you attach to this activity. So thank you on behalf of the ABC board and the Secretariat. We wish you a very blessed weekend. Thank you very much.
Thank you very much, Theo. Thank you, everyone. And bye. See you in all other activities of EAC Secretariat and EABC. Thank you for attending this one. Bye for now.